Okay. My bad, guys. I have not been posting. I've had a lot of stuff going on. But today, since we got a lot of time, we could watch all 3 of these videos, maybe even day 39 if I feel like it. To be honest, we could go to day 40 because, that's 33, 46, an hour, 10 minutes. Yeah, so we could have an hour on video. Something I want to talk about is on my day 2 video, right? 102 views, whatever. That's besides the point. This dude, okay, yup. Oh, it's gonna take you 3 years. Okay, I'm gonna stay consistent. Good luck, amazing vid, keep it up. W supporters. This dude says, be more energetic, dude. You sound like you just woke up. You need to give people a reason to watch TS. TS. It sounds like you're just trying to get it over with. Trading's not supposed to be fun. Mind you, bro posts Fortnite shorts as his entire channel. Let's go through these.
Yeah, it's okay. Alright. We're taking over at A. Shut
the Yo, this is the dude hating on me. So we're reusing clips, trying to get more views. Okay. Makes a lot of sense.
used to feel.
Nobody cares.
We made a bet. NRG need to view immediately. They've got the Riz in their favor. K-Dot tries to edge. Violet Panda skibidi toilets. And it's almost there. Justin keeps it 100. Turbo Pulsar there. Bounces into the...
Bro hates on me and he has his sound on this video talking about some skibidi toilet.
NRG still around. Justin hits that. What yet?
That's not a clutch, it's a 1v1, by the way. I don't even play Fortnite no more, bro. Doing all that. Doing all that. Doing all that for a bunker. Doing all that. Doing all that. Really, bro? This is what you're making your YouTube channel about. Okay. Seems very, this is very valid to hate on me. So reasonable. Bro, if you want to hate on me, at least don't be goofy in your vids. Wait, I already watched this. Oh. Alright, looks like we're just gonna go to day 40.
Whoa. What's that? I just built a budgeting app in Basic
Oopsie.
24. Guys, Nina just built an app.
Inbox.
Hello, my little baby boys. Hello. Are you guys ready to learn again today about where to take profit on your day trading journey?
Alright. Do I waste your guys' time for the first 5 minutes of this video, or do we get right into it? We'll get right into it. Okay, because you guys seem to enjoy last one. Let's get down to business. okay, I'm sorry. Focus.
let's sit and talk. How's your Sunday going? Mine's going great. Thanks for asking. Let me know in the comments how your guys' Sunday is going. All right, hopefully you guys are starting to get a good feel for all the shit that we've been covering, because now it's like, boom, we have the building blocks, we put the pieces together. You guys should know the fucking strategy by now. Now we just have the small things, okay? We're going to go over take profits today. We're going to go over stop losses tomorrow. And then from there, I need to do another check-in, and then just, boom, just start grabbing videos. Okay? And then, like, just seeing what you guys want me to explain, all right? So, with that being said, let's get into taking profits, okay? Taking profits is relatively easy, okay? Like, it shouldn't be too difficult to explain, but essentially, where are we looking to take profit at, okay? It's at our building blocks, okay? So, we're not going to go over execution, all right? We'll just go over where we're looking to take profit, okay? And again, it's literally just at our building blocks on whatever time frame that you're executing on, okay? Or whatever, like, one higher time frame you're on, okay? So let's say we enter.
Oh, also, let me just do a trade recap while I'm here. Took a trade today, hit a TP. So I've taken 2 trades on this new account. Started fresh, clean slate. Last time we hit for 1,200, as y'all know, and we hit for 715 today. And I believe I don't know, but we entered it around like right here. Our stop loss was right here. And I know y'all are going to say something about like, oh, it pushed past here. Wouldn't it have stopped you out? No, I entered like right here. And yeah, this is where my stop loss was at. And this is where my TP was at. And it was so good that I didn't get greedy and put it by side. Because, bro, we broke that structure. And then we just absolutely tanked, bro. We just straight tanked. But, yeah, that's pretty much it. $715. Not a crazy TP, not a terrible TP, but a good TP. We're still building up. We're almost at 2K profits. Yeah. All right, let's get back into this.
For short, okay, this would be a stupid short position to take because we're in an uptrend on a bunch of different things. But let's just say we take a short off of this liquidity sweep, break the structure to the downside. We enter on this candle close. For me, what would my first take profit be? Okay, again, this is a terrible trade to take because, like, our first take profit would essentially be here. Okay, but this is just showing, like, how we would set this up, okay? Don't focus on the risk reward. We're just going to go over what are high confluence areas to take profits at. And it's our building blocks, okay? So what do we have here, right? Our building blocks are areas where price is likely going to react off of or where price could fill orders, right? So what is this move right here? Swept liquidity, rally higher. This is an order block, okay? So you could have a take profit at the top of this order block or a take profit at the bottom of this order block. What also is in line at the bottom of this order block? Liquidity. Boom. Another one of our building blocks. What else could we do? Oh, what's this? A fair value gap. Cool. You can have a take profit. Boom. Within here. And at the bottom of it. It's really simple. That's like for me, when I set take profits, I set it off of boom.
You have it listen, you type it in, and then you go dig it.
Also, when I get to the end of boot camp, probably not gonna make videos as much anymore since I'm not really gonna have anything to watch. I might watch T-Trades, but that's really it. Hold up, we need a Jew break. We need a Jew break. There we go. Do break done.
The one higher time frame draw on liquidity on whatever execution time frame I'm on. Okay, so let's say we take a short position on the 5 minute. Okay, I would probably scale up to the 15 minute and find the first draw on liquidity. Okay, within the direction that we're taking the trade. So for me, that would be here. Okay, cool. Is this a good trade to take? No. Okay, we already explained it, but this is just for examples. Okay, cool. This would be my first take profit. Second take profit could literally just be, boom, this fair value gap. And then I always set like, I don't know, I usually set like 3 or 4 take profits. Okay, that's not really necessary. You know, you guys can put that into your trading plan. However many take profits you guys want, you guys can set it to, you know, oh, I'm only going to have 3 take profits. The first take profit is going to be the one higher time frame draw on liquidity, and then I'm going to use building blocks for the rest of it, okay? Again, with putting all the pieces together with that little series, we talked about how we can get 15-minute entries for 4-hour trades. That doesn't necessarily mean our first take profit is going to be off of like 4-hour liquidity. It could be if you want to stay in the trade for that long and if you genuinely think it's going to get up there. Me personally, since we're taking trades on lower time frames, I like to set take profits based on the execution time frame that we're on. Okay, so I find draws of liquidity on whatever time frame that we're executing on. I find building blocks for whatever time frame that we're on, and that's how I set my take profits. It's really that simple. Okay, I think taking profits is one of the smallest things that you guys need to worry about. I think the largest thing would be daily bias, and then following that would be execution, and then following that it would be stop loss, and then following that it would be taking profits. Okay, this is kind of the least of your worries, because if you're getting a good execution point, odds are price is going to go in your favor. And, you know, most of you guys aren't going to have a 1 to 10 risk to reward for your first take profit. Most of you guys is going to be like 1 to 1, 1 to 1.5, 1 to 2, 1 to 3, 1 to 4, 1 to 5 on 4K trade, on BDs, on GDK, on OBLA, all right? So, sorry, I said it was going to be normal. But anyways, that's literally all I do, okay? Like, I really don't know how else to explain it. So, like, boom, for this example, okay, we took out liquidity here.
I always say you can't manage what you can't see. Monday.com shows you the full picture like that.
All right, cool. We get a breaker structure to the upside. Yeah, let's just do this on the 4-hour. Cool, we get a breaker structure to the upside. Boom, we fill this fair value gap. Maybe we enter off of that. Boom, fair value gap entries. Stop underneath here. Let's say we're entering on the 4-hour. Okay. Most of the time, my first take profit is going to be minimum 1 to 1. Okay, that's kind of the goal. All right, so boom, 1 to 1. What kind of matches up with that? Cool, this high. Draw on liquidity, perfect. First take profit. What can be another take profit? There's another draw on liquidity. There's not much action within here. Boom, okay. Second take profit. Where could another take profit be? Well, there's this order block right here, but that kind of envelops this high already. So what can we do? Boom. Another draw on liquidity all the way up here. See, we're just using our building blocks to set take profits. Okay, let's find another example on this with like Forex, for example. Okay, let's say we see this liquidity sweep, breaker structure to the upside, and we just purely enter off that. Okay, we don't use anything else special. Okay, we ideally just want a 1 to 1. Okay, we have an imbalance within here. Boom, we can target the top of that imbalance. What else do we have within here? Boom, 4-hour order cost. Take profit 2. Oops, let's get rid of that. Take profit 2 can be the base of this. If we scale down to the 1 hour, what else do we have? 1-hour order block. Boom, take profit 3 right here, and then take profit 4 can be the liquidity that's all the way up here. Simple stuff, okay? Just use your building blocks because those are price magnets, right? If we see a liquidity void, right, what do we know about liquidity voids? Price is probably going to draw towards there. What do we know about liquidity? Price is probably going to draw towards there. Why? Why is it drawing towards these high confluence areas to fill orders, right? We've already seen and we've proven that these price ranges are high confluence for price to draw towards. So why wouldn't you want to set that as your take profit? right? Okay, cool. Like, let's look at this right now. This was a trade that we took on Friday that we closed for break even because price was taking fucking forever. Okay, we came into that 1 hour order block. Boom, we broke structure to the downside. Okay, one of my first take profits. Where even was it? I think it was off this order block. This 5-minute order block. Because we entered off of the 5-minute break of structure. Boop. Right here. Entered here, okay, or we entered off a 5-minute break of structure and then like a 1 minute order block. We entered off this thing. Okay, so our entry was up here, stop was like slightly above here. All right, our first take profit was boom, this 5-minute order block. Why? Because we were taking it off of a 5-minute break of structure and then a 1 minute entry. Okay. Ideally, I like to set take profits not based off of 1 minute confluences. Okay, because higher time frame holds higher power. So for me, I was like, okay, we had a 5-minute break of structure. We entered off of a 1 minute execution point, a 1 minute building block. We'll just target this 5-minute order block, right? How's this an order block? Boom. Oops. Boom. Sweep of liquidity, rally higher. Perfect. Price draws towards it. Where could my next take profit be? Boom. Literally right underneath this. Second draw of liquidity. Right under here. What can we also do? We can scale up. 15-minute time frame. What do we have here? Wow, would you look at that? A fair value gap. Boom. Take profit here. You could do another take profit here. Simple shit. Okay? Very, very easy. Really not much else to explain here. If I'm being real, you guys. That's how you take profits. I don't really know how else to. Look at Boogie just going crazy behind me, bro. Anyways, that's as simple as it gets. We're just using our building blocks on whatever price and time frame, or whatever time frame that we execute on, and we're using those price ranges because those are high probability price ranges that are pretty much price magnets for price to draw towards when we see market structure break, market structure shift to go in the other direction. Cool? That's all. All right? I'll see you boys tomorrow for a little stop loss lesson, okay? Peace out.
You've been promised incredible things with AI, but has it actually lived up to all the hype?
All right.
Hold up, I'm gonna go pee. Dang, bro, my arms are long. Looks like I'm gay.
Right. I asked the Discord, and we were like, yo, let's just do the freaking boot camp video while on Zoom too. Okay, so today's video is going to be on stop losses. And the reason why we have our current or our previous trade that we took today that got stopped out up is because we're going to use this as our first example of like just stop loss placement. But first of all, we're going to start off and just like move away from this for now. And we're going to, all right, give me 1 second. And we are going to talk about just like.
Gotta watch this video, and then save 40, 41, 42. Or no, I already watched 42 because I saw this video on Instagram. It's like, oh, you just need to watch these 4 videos. And it helped me a lot, but it didn't help me as much as I needed. So I'm gonna watch 40, 41, and 43 tomorrow, and then I'm about to do this one, and then calculate lot size.
Where to put stop losses in general, and then like kind of, I don't know, like
Usually for me, like I'm just gonna like pre-fire or try to say where I usually put my stop losses. Like with the trade I took today. Let me go back to that. Right here. Wait, I was wrong when I told y'all about my stop loss. No, my bad. I put it right here. And because that's like, that's the order block and that's the liquidity sweep. That's the order block. And usually when things get like filled or something, I'm pretty sure, or like order blocks, like there's an order block here. You enter here and you put your stop loss a little bit below the order block. And then you put your TP wherever. That's what I did.
where to put stop losses in general, and then also overall, like, I'm spacing out. Sorry. Today we're doing a video on stop losses. Okay, so to start off, the most basic and the most like fundamental thing in terms of stop losses, I rarely like do like kind of a elongated stop loss. Okay, and the only times that I'll do that, we'll talk about that later, but most of the time when people have a stop loss, they'll see, okay, liquidity sweep, break of structure, and then like order block entry, and then boom, they're in, right? Let's say it's a short position. They will typically almost always put their stop loss above the liquidity sweep, myself included. Okay, I almost always
That's
put my
what I do.
stop loss above the liquidity sweep. Okay, and I do this because if our bias was correct, if liquidity was actually taken out, then price has no reason to come back above this high, right? Because this is where, right, our order block, this is where orders were filled, and the price point above this high, and we'll talk about why we put our stop loss slightly above the highs as well to cover for spread, but if price ends up coming back above this high, then that means the liquidity sweep was not valid. That means liquidity was not swept. That means there was not enough volume or volatility. That means there weren't enough orders to be filled to push price in our bias and in our direction. So our stop loss always has a purpose. Our stop loss is essentially our invalidation area. Okay, so if price ends up coming back up here, then cool. Okay? That means our trade is invalidated, and that liquidity sweep, whatever we were taking the trade based off of, that area, that price point, that price range, that confluence, that building block was not valid. We were wrong. Okay? So that's standard. Okay? That's like the most basic thing. I almost always put my stop loss above the liquidity sweep. Okay, so
how do you go from zero experience to flying for one of the world's largest airlines?
oops. Boom. That's as simple as it gets. Okay? That's like, you're just like super simple, perfect fucking like easiest way to do it. Stop loss above your liquidity sweep. Whether you're entering off of a fair value gap or an order block, your stop loss should still be above the liquidity sweep. It should not be right above this high, right? Let's say you enter off of like this, and it should not be right above this high. Why? Because price could easily come back a little bit higher and then come back down. Okay, you want price to be above the liquidity sweep because that's where price would be invalidated for us. Cool? Cool. Okay, moving forward, what are some exceptions? Some exceptions to this. And I don't even really like these exceptions. If price looks like this, and this is our breakup structure, and the liquidity sweep is so high up that it pretty much would give you a terrible risk to reward, then I try and find other confluences within here. Like, okay, let's say there's a fair value gap here, an order block, or like order block like right here. I would put my stop like above the order block, and I wouldn't put it above the liquidity sweep. Does that make sense? Because we want our ideal trade is a good risk to reward, right? But the reason why I don't necessarily like doing that is because, right, the invalidation point is above the liquidity sweep. So price could still technically move up and take you out of the trade and still go within our bias. Okay, so that's the easiest thing to do. Just put it, boom, below or above the liquidity sweep. Now let's look at the trade that we took today and go over how price is still technically within our bias. And look at this right now. Like, we would still be in profit. We would be in profit right now. But that's nothing to cry about. It just means our bias was correct. Good job, us. But anyways, if we're seeing this right now, and we see, okay, this is where our stop loss was. What were our confluences? Go look at the trade recap. I don't want to go over it again. But we entered off of this breakup structure, off of this candle closure. Okay? We put our stop loss, first of all, every single time, at least put it like, I would like to say like 0.5 points, 0.5 points below the actual price point, or figure out what your spread is on your broker for the specific pair. Because if you put your stop loss directly on this price, like literally on this exact price on your brokerage, guess what? When price comes down to like right here, you will be stopped out of the trade. Why? Because the ask price is right here and the bid price is right here. Or I don't know what the difference, like I don't know which one's higher, which one's lower, ask or bid. But you know what I mean, bid or ask price, right? You are going to get stopped out by spread. And you're going to be screaming and fucking crying if price ends up coming back up and going in your direction. So what do you have to do? You have to account for spread, because guess what? Even if price comes to this exact price point, your stop loss is going to be under here and you're going to be protected because it's only invalidated. Your trade is only invalidated once this price point gets broken below. Okay, so what I always like to do, I like to give it like a little bit of room. So for us, ours was like, what was it? It was four below. So it was like right here. As you can see, we got stopped out by this. Okay, and that was for, some other reasons. Maybe we should have covered ourselves by putting price lower over here. I put my stop loss underneath here because we had a...
Got something to tell y'all.
liquidity sweep on the 5-minute right here, and then a breaker structure on the 1 minute to the upside. So I was considering this my liquidity sweep. So that's why I put our stop loss.
Why do I look so fat right now?
Does that make sense? Okay. What are some of our exceptions for, maybe when we don't have a liquidity sweep, or maybe it's like a higher time frame trade, such as this one. Okay, look at this price. And we're on Zoom right now with my Discord. I know they're raging because we had a 5-minute breaker structure right now. But hey, that just proves our bias was correct. Okay, so I know y'all are raging. I don't even have the Discord open, but I know you guys are raging. Some exceptions, right? Like for this example, okay, we had a liquidity sweep on the 15-minute, breaking structure to the upside on the 15-minute. Could we have done a long-term trade on the 15-minute? Sure, but no one wants to have this all the way down here and have to make this, which would have been our final take profit, our first take profit for a way lower risk-to-reward ratio. Okay, so what can you do on that? Well, you could scale into a relatively higher time frame okay, and try and find, you know, maybe a low, like one scale lower low that's underneath the liquidity sweep if you want to be extra safe. And again, you need to keep risk management in mind.
Imagine being able to build anything just by thinking about it. Meet Base 44, a complete AI creation platform.
You need to keep risk management in mind with this. All of this is just purely based off of your own risk tolerance. That's what I like to say. Whatever you are comfortable risking, because I use a set lot size, and we'll cover that in this boot camp, how you can figure out what your set lot size should be, and then how you can find the scale of different lot sizes to use based on your confidence for the day. So like for today, for example, we won't get too deep into this, but today, for example, I risked half of my usual lot size. Usually on the S&P, my normal is like 100 lots, and I know you're going to say, damn, that's fucking crazy. It's 10 units per lot instead of 100 units per lot size, which is what most brokers are. So just it really would be essentially 20 lots on like a normal offshore brokerage. Hanko's just a little bit weird. Okay, so my usual is 200. I risked 100 lots today because why? We had high impact news, and we also have a bank holiday tomorrow. So odds are we were going to have relatively low volatility, kind of choppy market conditions, and we also had high impact news. We have high impact news throughout this entire week. I'll probably de-risk myself this entire week. Okay, that's something to keep in mind. So it's like your stop loss is purely based off of your risk tolerance, and then also understanding where is your invalidation point. That's all it is. Your stop loss should never be like shouldn't be based purely off of points or pips. It should be based off of where price is then invalidated, where your bias is invalidated at that point. Okay, so for me, my bias was invalidated today because I saw we had a sweep of liquidity and a break of structure to the upside. My stop was underneath this liquidity sweep. Yes, my overall daily bias was bullish, right? And that is getting fulfilled. But for this specific execution, for this specific trade, I was considering this a liquidity sweep and a 1 minute break of structure. Does that make sense? So this was my invalidation point. It got invalidated, but then price ended up moving higher. Make sense? Cool. All right. That stop loss is explained. Okay, so that's going to cover it for today's video. I know it was relatively short.
Should I watch this video? Yeah, we could watch this video.
All right. First of all, happy 4th of July, but I'm gonna be busy today because it's the 4th and it's a holiday. And if everybody else is taking days off, so am I. Okay, I'm gonna make this video and then I'm gonna leave. All right. So we'll hair in my mouth. So we'll make this really quick. Today is going to be going over position sizing. Okay, so we covered take profits, we covered stop losses. And now I want to talk about figuring out what lot size you want to use. And there's essentially, well, there's 3 strategies. There's using a set lot size for every single. I'm about to throw that ball out, bro. Boogie is driving me crazy. Boogie, come here. Bring me your ball, bro. Where did you put it? Yeah, this is mine. You're done with this. Get on the bed and lay down. Bro's giving me a headache. Anyways, sorry. Start from the beginning. Okay, there's 3 different ways that you can do this.
We got that reggaeton. Today we're gonna be making beats.
Okay, you can use a set lot size. That's what I use, and I use a range of set lot sizes, and we'll talk about that. You can also calculate your lot size every single time. Okay, so that's what we'll show how to do, and then you can also full port, which you will never do, and if you do, I will be very upset. So 3rd option is completely out of the picture. Okay, so we're gonna go over the 2nd option right now, which is calculating your own lot size. So you are going to start off. All right, go find whatever lot size calculator you want. Okay, there's a great app on the App Store called Stinu. Okay, it's STINU. Not a sponsor, not an ad. And this is what I used to use. Okay, so when you open it, it'll look like this. I don't know if you guys can see this that well, but essentially it says account balance at the top, risk amount in percent, and then stop loss in pips. Okay, so all you do, let's say we have a $1,000 account. Okay, you type in 1,000 up there, and then let's say we want to risk 1%. We type 1 in there, and then let's say our stop loss is 30 pips. We type 30 in there, and we go to the next, and then it gives you all the Forex pairs right there. This one, unfortunately, does not have the S&P 500. That's why we have this thing up. Okay, but this has all Forex pairs including gold. Okay, so what do you do? Let's say we're doing GBP USD. You click GBP first, and it gives you, boom, GBP / above, and then you can just click USD, and you click calculate, and it tells you the exact lot size that you should use to risk that amount for your account size. Super great app. Use that for Forex stuff. I think it's like $14. You have to pay like a year to use it, and if that's a lot of money to you guys, you shouldn't be trading. Okay, moving forward. Okay, that's how you can do it on your phone. To do it on the internet, we have this nice little website right here. Okay, and I like using this site because it has the option for the S&P. Okay, and it has Forex pairs. So 2 in 1. All right.
I literally don't even need to watch this video because you just put which pair you're trading, currency you're trading, which is USD. You set your pip stop loss, your account balance, and how much you want to risk, and then gives you, and you put your pip size, and it gives you. Alright, that's.
Would you be happy if you stayed where you are in life and job forever? If the answer is yes, then this video is not
Gonna be it for today, so peace, guys.